Hi guys, hope all of you doing good. So today we are planning to discuss CMA final Group 4 Paper 17 Corporate Financial Reporting. So under that I'm planning to discuss the accounting standards. Okay, so accounting standards in India you have presently two sets of accounting standards. That is, one is existing accounting standard, another one is IND-AS, Indian Accounting Standard. There is two types of accounting standard available in India now, okay, for the companies. So this IND-AS, for final level, both the accounting standard is applicable to you, that is existing accounting standard as well as Indian accounting standard also. So this applicability of IND-AS is based on the net worth of the company, as well as if it is a listed company, then IND-AS is applicable mandatorily. Net worth also, if it is more than 250 crores, the more than 250 crores companies needs to comply the IND-AS. They have to implement the IND-AS. Okay, so the government and the Indian government is planned to implement this phase wise, actually phase 1, phase 2, phase 3, this IND-AS. Maybe in future they will try to adapt this IND-AS for all the companies. That might be their aim. So we will discuss in a separate topic applicability of IND-AS and also applicability of existing accounting standard. Existing accounting standard, you have three categories. So existing accounting standard also, you have level 1, level 2, level 3 enterprises. So like that applicability standard is there, that also we will discuss. I am going to focus on existing accounting standards first. IND-AS later I will focus. The existing accounting standards and also the accounting standards which is not covered in inter level. Okay, accounting standard which you have not studied in inter level, that I am going to focus first. So then we will go to the syllabus. We will go to the syllabus and we will understand the syllabus structure now. Okay, just go through the syllabus. 2016 paper 17 corporate financial reporting. You have the breakup, that is generally accepted accounting principles, gap and accounting standards. For that they allocated 20 percentage. Okay, that 20 percentage only we are going to discuss. In this 20 percentage you have two sets of accounting standards, that is existing accounting standards as well as Indian accounting standards. So examination point of view, you can expect multiple choice questions, at least some around I think they are asking around 8 to 10 marks from the accounting standards. Okay, in multiple choice question itself. Apart from that they are asking problems, separate question, and they are asking theories also. So we will focus more on what is not covered in inter level. What is not covered in inter level? If it is already covered in inter level, you would have some basic ideas. And I am not going to explain you what is accounting standard meaning and everything, that you have already have some idea. I hope all of you have some idea. Even if you don't have that idea, you please go through my inter level videos. I posted accounting standard for group 1 accounting standard. I posted already around 5 to 6 accounting standard I posted there. I explained what is this accounting standard, everything. You just go through those videos. Okay, so now I am going to plan accounting standards. So today topic is AS 13 accounting for investments. Okay, this is existing accounting standards. Under the existing accounting standard, accounting for investment. So that is what we are going to discuss. Just take your material. I am using the version. So AS 13 accounting for investment, I am using the version August 2019. The page number is 34. Okay, page number is 34. Just you please also take your material for understanding. So AS 13 accounting for investments. So what is investments actually? Generally, what is investments? So investment, why we are investing? Investment is an expenses or asset. So investment is generally an asset. Okay, So what is the purpose of investment? How it is different from fixed assets? What is the difference between fixed assets and investment? So generally, fixed assets we used to deploy in our business. We used to deploy the fixed assets in our business for generating the operating income. For generating the operating income, we used to invest in fixed assets, maybe plant and machinery, fixed assets, furnitures, all those things. Okay, safety equipments, all these things is directly related to business, and it is deployed for the purpose of making production and making sales, and it is related to our operating income. But in case of investment, that is not directly deployed for into our core business. Rather, we invested for getting some gains. That may be a short term gain or long term gains. Generally, what type of investments we can do? For example, we can invest in shares, we can invest in debentures, we can invest in other securities also. The why we are investing actually? So our the purpose of investment is to generate short term gain or long term gain also. So, and also regular incomes also, routine incomes, recurring incomes. For example, invested in debentures, I will get interest regularly. Invest in shares, I will get dividend regularly. Okay, likewise we have to understand this topic. So first of all, you should know investment is an asset and it is different from fixed assets. Fixed assets means it is directly deployed for running our business and generating income. There is a future economic benefit from by deploying that resource. But in case of investment, that is held for for making some short term gain or long term gains also. Even capital gain, that is appreciation. Okay, so this is what the meaning for investment. Now we will go through the material language. What is investment as per material? So investment is the asset held for earning income by way of dividend, interest and rentals for capital appreciation or for other benefits to the investing enterprises. Asset held as stock in trade or not investment. Note this point: asset held as stock in trade. Stock in trade in the sense their job itself doing investment. Their job itself doing investment. They will be in a stock trader, stock all of stock agents, all they will buy and sell the shares on daily basis. That is their business actually. Okay, then that becomes stock in trade. Stock in trade, not an investment for them. Okay, so what is the first point? This standard deals with accounting for investment in the financial statement of enterprises and related disclosure requirement. Okay, so this standard is applicable for whom? When whoever is preparing the financial statement, that is balance sheet, P&L. In that we have to do some accounting for investment. So what is the purpose of this topic actually? What is the objective of this topic? Yes, I invested some amount. I invested 10 lakh rupees. For example, I invested in share market 10 lakh rupees. I spent 10 lakh rupees. Then what is the amount I should put in my balance sheet? As on balance sheet date, if I invested 10 lakh rupees, whether I should put 10 lakh rupees or some other figure in my balance sheet date, that is the question you can get it. That is the doubt you can get it. So generally we used to recognize everything in cost, correct? AS10 plant property equipment, if you go through, initial recognition is measurement is on cost only. But in case of investment, how to recognize that? As on balance sheet date, how to recognize the investment? Okay, that is what we are going to understand here. So accounting for investment is nothing but what value I am going to put in the balance sheet for that share amount or for that debenture amount, for any other securities. What value I am going to put in the my accounts. That is what accounting for investment. Okay, so then the second point is the standard does not deal with Standard does not deal with what is not included in AS 13. Okay, that is given here. If the interest, dividend and rental income, rental earned on investment which is covered under AS 9 means, then that portion is not included in AS 13. Okay, recognition of interest, dividend and rental income, that is related to P&L account. Actually, income related to P&L account generated from this investment is covered under AS 9 revenue recognition. Okay, asset portion is covered here, revenue portion is covered there actually under the AS 9. Okay, what is the next item? Operating or finance leases, that is actually AS 19. If your investment is based on the operating or finance leases covered under that AS 19 means, then AS 13 is not applicable. Okay, then also investment of retirement benefit plan and life insurance enterprises, that is actually retirement benefit plan like pension plan, PF, voluntary provident fund, gratuity, all those things. Okay, so this plan, if we invested anything on this plan, then AS 13 is not applicable. And also life insurance enterprises, companies. Okay, and also fourth point, mutual fund and venture capital fund and the related asset management companies, bank and public financial institution. For all these institutions and the mutual fund institution, venture capital fund, all these institution, AS 13 is not applicable. Okay, so further topic is, the following term are used in the standard within the meanings assigned. So the first one is current investment. Current investment is an investment that is by nature readily realizable and is intended to be held for not more than 1 year from the date on which such investment is made. What is the meaning? So generally, I invested in some shares or I invested in some debentures, but my intention of investment is short term. Short term means I am not going to keep this shares for more than 1 year. My intention is I am going to sell this share within 1 year. I am going to make profit. I am going to make some profits within 1 year, like capital gain as well as any interest income, whatever it is. But my holding period will not be more than 1 year. Generally, intention, that is what they said, intended to be held for not more than 1 year from the date on which investment is made. Okay, current investment is an investment naturally readily realizable. Readily realizable means I should be able to realize the cash whenever I want, and also the holding period will not be more than 1 year. Okay, that is current investment. Current, 1 year, less than 1 year, and readily realizable, then that is current investment. Okay, then what is the next one? Long term investment. Long term investment means other than current investment. Long term investment means what it is given here. Long term investment is an investment other than a current investment. So what is the meaning? Other than current investment means more than 1 year. Normally, if my intention to keep that share is for more than 1 year, and I don't want to make any immediate profits, speculation profits, correct or not? Speculation. I am not expecting a speculative income. I am expecting a long-term capital appreciation. Then that comes under long-term investment. Simply, it is a negative definition. If it is not a current investment, then it is a long-term investment. In Schedule 3 balance sheet, Schedule 3 preparation of financial statement, equity and liabilities balance sheet, in that this long-term investment should be categorized as a non-current investment. Okay, this long-term investment should be categorized under what category? Non-current investment. Here it is long-term investment, but in case of Schedule 3, the same should be classified under non-current. Current, non-current. There is two types of investment. Presentation of financial statement. Basic understanding of Schedule 3. If you have a doubt, please go through my videos. Group 2. I posted videos under inter-level Group 2 paper 12. Okay, presentation of financial statement. There I explained current investment, non-current investment, all those things I explained. Okay, so long-term investment means other than current investment. Okay, what is the next item? Investment property. What is this investment property? One is current investment, another one is long-term investment, another one is investment property. What is this investment property? Suppose if I am holding some land and building. Suppose if I am holding some land and building, I have some land and building. I have a building. Why this? What is the purpose of having this building? What I am going to do with that building? That is used for directly for my business. That I have to check. If I am not using that directly for my business, for my production, for my manufacturing purpose, I am not using for my manufacturing purpose, I am not using for my production purpose, then what is the purpose I am keeping that building? For generating some rental income. For generating some rental income. Got it or not? If my purpose is generating rental income and I am not going to use for my direct business, I am not going to generate any operating income from that building, then that is an investment property. That is an investment property, because my objective is not directly deploy that asset into my business and generating revenue. Rather, I am making some other income by giving to rental or something like that. I am generating some rental income. Okay. Now you just go through what is mentioned here. Investment property is an investment in land or building that are not intended to be occupied substantially for use by or in the operation of the investing enterprises. So they are not directly occupying that for their business operation purpose. And also, for example, if a company purchases land or building not for its business use, not for its business, they are not going to use for their business, but for earning the rent by letting the land or building. So the objective is earning rent from giving to rent. Okay, so continuation. The land or building is not fixed assets, hence because it is not used for their business. So the land or building is not fixed assets, but it is an investment. Or even if building is not used for directly for the business, and that is for only rental purpose. And also I am keeping that building only for making some capital appreciation, meaning I bought the land building for 10 lakh rupees, but I am expecting to sell when it reaches 50 lakh rupees. You got it on what I am saying? I bought a building, land and building. What is the purpose? Why you bought it? I bought it for capital appreciation. What is capital appreciation? My intention, when it reaches 50 lakhs, the same land and building, if it reaches 50 lakhs, I will sell that building and I will make a capital gain. Buying price is 10 lakh, selling price is 50 lakhs. 40 lakhs is my capital gain. If that is your purpose of holding that building means, then that is also an investment property. Okay. What is the next item? Next item is fair value. They have given some definition actually. Why all this definition? To arrive the value of investment, to account the value of investment. We should know all these values: fair value, market value, all those things. What is fair value generally? The two parties, willing parties, A and B, wants to buy and sell on particular goods means, what is the price under the controlled regulated environment they can sell, and this A can sell and B can buy that product. Okay, that is fair value. Generally, what is given here? Fair value is the amount for which an asset could be exchanged between a knowledgeable willing buyer and a knowledgeable willing seller in an arm's length transaction under appropriate circumstances. Market value or net realizable value provides an evidence of fair value. So what they are trying to say, there is a party called A, there is a party called B. A is a seller, B is a buyer. They are going to sell one product called X. So A also know that product is X. B is also know that the features of product X. A also know the features of product X. Both are aware about that product X. And A and B is selling this product in a competitive environment, controlled environment. Willing. A is also willing to sell. B is also willing to buy the product. Okay. So in this case, there is a willingness, there is a price, there is a product. And A and B both are having sound mind, they have a knowledge about that product, then that whatever the price you are getting, that is fair value in such a case. Normally what they are saying, market value or net realizable value is fair value they are saying. Okay. What is the next item? Market value. Market value is the amount obtainable from sale of an investment in an open market net of expenses necessarily to be incurred on or below of on or before disposal. So if I sell some investment in the market, what I will get after reducing the selling expenses. For example, brokerage, commission, all those things. After reducing this selling expenses, whatever I get, that is the market value. If I want to sell the investment, okay. What is the next one? This is important. Classification of investment. Investment is classified as long-term investment and current investment as defined above. Okay. Long-term investment more than 1 year, that is negative defined. Other than current investment is long-term investment. Then current investment is more than 1 year. I am not going to keep that investment for more than 1 year, and it is readily realizable. I can convert that into cash anytime. That is current investment. Okay. Come to the next page. Cost of investment. So what is this cost of investment? Why we are arriving the cost of investment? For accounting the investment, we should know cost of investment. For accounting the investment, we should know cost of investment. What is this cost of investment? Okay. Generally, what is cost? Whatever we spend for purchasing something, that is cost, correct? So here also like that only. Okay. Many scenario is given actually. Many scenario is given. What is the first one? The cost of investment includes acquisition charges such as brokerages, fees, and duties. What they are trying to say? The cost of investment includes what are the costs? Purchase, acquisition charges such as brokerage, fees, and duties. So simply they are saying cost of investment means, say for example, if I purchase shares means share price is 100 rupees. I paid brokerage 1 rupees, fees 1 rupees, and duties 1 rupees, means 100 plus 1 plus 1 plus 1 equal to 3. Okay, that is what they are trying to say. I will just show you an example. So cost of investment. Sorry. Okay. One is purchase price 100 rupees. Purchase of shares. Assume purchase of shares plus brokerage plus fees plus duty. Okay. 1 rupee, 1 rupee, 1 rupee. So total is 103 rupees. Okay. This is cost of investment. So the cost of investment includes purchase price plus brokerage plus fees plus duty, everything. Okay. So we will go to the next point. What is the next point? If an investment is occurred or partly occurred by the issue of shares or other securities, the acquisition cost is the fair value of the securities issued. The fair value may not necessarily be equal to the nominal or par value of the securities issued. What they are trying to say here? Again read it. If an investment is occurred or partly occurred by the issue of shares or other securities, the acquisition cost is the fair value of the securities issued. The fair value may not necessarily be equal to the nominal or par value of the securities issued. So, say for example, I am going to buy a share. I am going to invest. Actually, I am going to invest. While investing, I am not spending cash. Actually. Rather, I am issuing shares and I am investing. Rather, how I am investing? I am issuing shares. That is what they said. If the investment is acquired or partly acquired by the issue of shares or other securities, I am going to invest in your company by not cash. I'm not going to spend cash. Rather, I am going to issue shares and I am going to buy the investment. In this case, what is the cost of investment? In this case, what is the cost of investment? What they said actually, the acquisition cost is the fair value of the securities issued. The acquisition cost is the fair value of the securities issued, means I am investing in your I am investing actually. How I am investing? By issuing my shares. By issuing shares, I am investing in your company. Correct? So in this case, what is the cost of investment? I am issuing shares now. For that fair value you have to arrive. For that fair value you have to arrive. That fair value is the cost of investment. Okay. So in question, if they gave the scenario, if in question they are giving scenario, means you have to take the cost. Which one you have to take as a cost? The fair value of the shares issued for buying the investment. They will give one value. Fair value of shares issued is so much, means you have to take that value as the cost of investment. Okay. What is the next one? If an investment is acquired in exchange or part exchange for another asset, the acquisition cost of the investment determined in reference to the fair value of the asset given up. Here, what they did, they are going to invest in another company. They are going to buy the another investment. How they are going to buy the another investment? Not by cash or not by shares actually. They have already one asset in their company. Any asset. Okay. They are going to give this asset and they are buying that asset. You got it now what I am saying? Exchange, barter system. Exchange, there is no cash involved. Simply, I am giving this asset. On behalf of this asset, give me your asset. In this case, what is the cost of investment? Here also, fair value of the asset given up. Fair value I explained above actually what is fair value. That value in question they will give. Fair value of the asset given up is this much. Lot of values they will give. You have to choose fair value of the asset given up is the cost of the investment for the particular transaction. Okay. Then what is the next item? When interest is accrued in pre-acquisition period and was included in cost of investment at the time of acquisition, then subsequent receipt of such pre-acquisition interest is deducted from the cost of investment. When interest has accrued in pre-acquisition period and was included in cost of investment at the time of acquisition, then subsequent receipt of such pre-acquisition interest is deducted from the cost of investment. What is the meaning actually? Say for example, I am buying debentures. I am buying the debentures. Say for example, I am buying a debentures worth of. So dividend is completed, and the next thing is right shares. This right shares offered. What is this right shares? Right shares is issued to the existing shareholders. Correct. So existing shareholders is eligible for right shares. So for example, if existing shareholders is holding some shares, each shares worth 1,000 rupees. Each shares worth 1,000 rupees. Okay. And the company is offering to the existing shareholders. at 800 rupees per share. 1:1 ratio. 1:1 share ratio. For example, one person is having only one share. Existing share price is 1,000 rupees. Correct. Existing share price is 1,000 rupees and the company is offering for 800 rupees. Then what is the cost of investment for 2 shares? Cost of investment for 2 shares is 1,000 plus 800, 1,800. That is the cost of investment for 2 shares. That is what they said here. If the person is buying that shares, then 800 rupees. Okay. Hope you able to understand what I am saying. So I'll write here better. Okay. So existing shares, one share equal to 1,000 rupees. This is existing right share. Right is 1:1. It is how much? 1:1. Okay. Then, for example, for one share, how many share will be issued? For one share, for one existing shares, one right share will be issued. So one share will be issued. They are issuing for 800 rupees. Assume the investor is purchased. They are asking what is the cost of investment for 2 shares. So for 2 share, after right issue, the cost will be 1800. Okay. Then what will be the per share value after right issue? 1800 divided by 2 equal to 900 rupees per share. Revised value is 900 rupees. Okay. This is what explained here. This is what explained here. Okay. So, but the investor is not interested in buying the right share. The investor is not interested in buying the right share. What will happen? So in such case, what they will do normally, they will transfer that right to some other person. That investor will transfer that right to third party. Okay, with some money. For they will transfer, mean they will sell that rights to some other person. So that some other person will buy the right share. So for while selling, he will ask some value from the some other person. So that is like a gain. That is like a gain. So that gain should be credited to P&L account. That gain should be credited to P&L account. Okay. So come to the next topic. What is the next topic? Carrying amount of investment. What is this carrying amount of investment? Carrying amount of investment means till now we understood what is cost of investment. Till now we understood what is cost of investment. Carrying amount of investment means what amount should be presented in the balance sheet. What amount should I present in the balance sheet? Carrying amounts carrying in the balance sheet. Carrying amount means carrying in the balance sheet. What amount should be carried in the balance sheet? That is carrying amount. What amount I should write in the balance sheet? Okay. So what amount we have to write? Here it is given. So carrying amount of each current investment is the lower of cost and net realizable value. First you have to identify cost of the investment, and you have to identify realizable value. Compare both, and what is lower, that should be your carrying amount in the balance sheet. Okay. What I should do different, sir? What I should, if I make loss, what will happen, sir? My cost is 100 rupees. I purchase it for 100 rupees, but the value is now only 80 rupees. Value is now only 80 rupees. 20 rupees loss to me because my carrying amount is revised. What I should do that 20 rupees? I have to debit to my P&L account. I have to debit to my P&L account. Okay, that is what explained here. I'll just show you the example. So current investment carrying amount we are going to identify. For example, cost rupees 100. Okay, realizable value equal to rupees 80. So as per the carrying amount, as per A is 13, whichever is lower we have to choose. So 80 rupees should be my current investment in the balance sheet. Okay, balance sheet, my current investment is 80 rupees. So 20 rupees loss. What I should do with this 20 rupees? Debit to P&L account. Okay, that is what they said. That is what they said. Okay, now come to the next point. long-term investment. So the carrying investment of current investment is lower of cost and realizable value. That is the carrying amount for the current investment. Then come to the long-term, non-current investment, long-term investment. Long-term investment we know, other than current investment, is a long-term investment. It is usually carried valued at what? Cost only. It is usually carried valued at what? Cost. But when we should consider the other aspect, when we should consider, when we have to account in other manner. Next point you just refer. If there is a decline in value of investment and if such decline is not temporary, the carrying amount of investment is reduced by the amount of such decline. The resultant reduction in carrying amount is charged to the P&L account. This reduction amount is reversed when there is a rise in the value of investment, but such rise in value should not be temporary. What they are trying to say? Normally long-term investment means it should be valued at only cost. Cost means whatever you spend initially for purchasing. Okay, for purchase price, that is a purchase price. Whatever you spent, that is should be the balance sheet amount. That amount only you have to post in balance sheet. But there will be some cases where carrying amount may be 10 lakh. Carrying amount of shares is 10 lakh rupees. I am using for long term. My purpose is long term. I am going to hold this for long term. But what happened? There is a permanent decline in the market because of some reason. For example, that company's major godown, company's major factory is destroyed due to accident. Company's major factory is destroyed due to fire. Their company's total stock there is lost due to fire and accident. This is temporary or permanent. This loss will be permanent. They will not. It is not possible to recover from the loss easily. This type of scenario. So this type of scenario, what will happen in share market? The market price will decline automatically. To some extent, it will decline. Whether that decline will be permanent or temporary in nature, mostly it is permanent, because once the total factory itself destroyed means, to recover, to renovate the factory, it will take years. Correct? Whether they will continue the business or not, we don't know. In such cases, if the value is permanent decline means, in such a case we have to revise the value to, for example, share price is 1000 rupees. The market price becomes 500 rupees means, then you can classify under 500 rupees. So then what I should do with that 500 rupees? Sir, cost is 1000 rupees, but you are showing what you are saying us to value for 500 rupees carrying amount. What I should do, the difference 500 rupees? Debit to P&L account. It is a loss. Debit to P&L account. That is what they are saying. Okay, similar to current investment only. But here long-term investment normally only cost. Only if there is a permanent decline in the value of investment, then only you have to consider the other side of the particular share. That is an actual value. That is a market value, whatever it is. Okay. So cost versus other market value. When you have to compare, only there is a permanent decline in the value of the asset, then only you have to consider the reduction. Otherwise, you need not to bother. It is a regular fluctuation only, sir. Today 1000 rupees. My cost price is 1000 rupees. Today market price is 1900 rupees. Tomorrow it will become 1100. Day after tomorrow it will become 950. After that 975. After that 980. Again 1010 rupees, 1020 rupees. Daily market price will change. For that reason and all, I cannot change my long-term investment value. Suddenly it becomes 500, sir, market value. Why? Because there is a loss. There is a fire. Total thing is got destroyed. There is a court order. Like that, there should be some permanent evidence should be in our hand to account this permanent decline in value. Okay. So this is what they explained. Then come to the next thing. Investment property. What is this investment property? So this investment property, just now I explained you. Investment property is used to held for the purpose of generating rental income and other things. That investment property is always accounted in cost. That investment property is always accounted in cost under AS 10, plant property equipment. Investment property is covered in plant property equipment itself, not here actually. Okay, if you want to understand AS 10 plant property equipment, you please go through my intermediate videos. There I posted some basic level knowledge of AS 10 actually for group 1 students. Okay, so what is the next thing? Disposal of investment. What is this disposal of investment? Disposal of investment. Disposal of investment means selling. Normally we are selling the investment. Okay, while selling, what will happen? We will get some gain, we will get some loss. Correct, both will happen. If it is a gain, credit to P&L account. If it is a loss, debit to P&L account. Okay, you have to compare versus carrying amount versus actual sale amount. Okay, general thing. Profit on sale of investment, loss on sale of investment. Okay, profit should be credited to P&L account, loss should be debited to P&L account. Okay, what is the next thing? When only part of total investment is disposed, the carrying amount of that part of investment determined on the base of average carrying amount of the total investment. Sir, I am having 10,000 shares. Out of 10,000 shares, I am selling only 5,000 shares. Balance 5,000 shares I am holding. I am not going to sell. How to calculate my profit or loss on this case? Average it. If you have 1,000 shares, what is the cost? Total cost. Divide by 1,000. Then arrive per share value. Then multiply with 5,000 shares, you will get the part of the investment value. Okay, for example, total cost of share is 10,000 rupees. Totally I am having 1,000 shares. 10,000 rupees is the cost of shares. 10,000 rupees divided by 1,000 shares equal to how much? Rupees 10 per share. Now I am going to sell 500 shares out of this 1,000 shares. Then what is per share value? 10 rupees. Then what is total share value? 500 into 500 only I am going to sell now. 500 into 10, 5,000 rupees. That is my cost. Okay, that is what they said. Average carrying amount of the total investment. What is the next one? Reclassification of investment. This is also very, very important. So the next thing is reclassification of investment. What is this reclassification of investment? Suppose the company is initially their intention is to hold that share for within 1 year. They want to make immediate profits. They want to make speculation profit. They want to sell that share within 1 year. That is their intention. But after that they changed their intention. Okay, due to various reasons they changed their intention and they wanted to hold the share for more than 1 year, and they are not interested in short-term speculation, short-term profits. Okay, short-term capital appreciation they are not interested. They want to keep it for long period and they want to get some long-term revenue from that asset. Okay, in such cases, initially recognized it as a current asset. Initially recognized a current investment. But now I wanted to change it to long-term. Then what is the value I have to put in such case? What is the value I have to put in balance sheet in such case? Initially, if it is a current investment, what is the valuation? Lower of cost and realizable value, correct? But initially, if I want to make it as a long-term investment, what is the valuation I have to put generally? Cost. If it is a current investment, cost and realizable value. If it is a long-term investment, it is based on cost only, unless there is a decline in value. This is what we studied. But in case of reclassification means current to long to current. Okay, initially it is presented as current investment, but I am changing it to long-term investment now. Initially it is presented as a long-term investment, but I want to change it as a current investment. That is the scenario. So what is the first scenario? Current investment to long-term investment. How we have to value in such case? Just go through the theory. So where long-term investments are classified as current investment, first case is long-term investment is classified as a current investment. So where long-term investment are classified as a current investment, transfers are made at the lower of cost and carrying amount on the date of transfer. Lower of cost and carrying amount at the date of transfer. So we have to compare two things. If it is a long-term to current investment, we have to compare two things. One is cost and carrying amount. Lower of these two should be value of the balance sheet date. What is the next one? Where investments are reclassified from current to long term. Current to long term. Transfers are made at lower of cost and fair value. Cost and fair value only we have to take it for current to long term. Okay. So just I will write. What is the first case? What is the first case? Long term investment to current investment. What is the accounting treatment? Lower of what and what? Lower of cost, lower of cost and carrying amount. Carrying amount means amount available in the balance sheet. Okay. This out of these two, what is lower? Should be the value of my current investment. Should be the value of my current investment. What is the another scenario? Current investment to long term investment. Okay. Here what is the value? Lower of what and what? Lower of what and what I have to compare? I think cost and fair value. Okay. Cost and fair value should be compared. Okay. That should be the value of long term investment. So this is first scenario, this is second scenario. Two scenarios. Okay. Then go to the next topic. What is the next topic? The final one is disclosures. So any accounting standards, the objective of accounting standard, everything I discussed in group 1 video, you just go through. The purpose is basically accounting, recognition, classification, valuation, presentation and reporting and also disclosure. Like this, there are many purposes for accounting standards. So all the major accounting standards, every accounting standard, there will be some disclosure always. Disclosure means what we did for this accounting standard AS 13, whatever the important area in this AS 13 in our company, whatever we did related to this AS 13, that should be disclosed separately. Okay. What are the major items? AS 13, what should be disclosed? What is the first item? Accounting policy for determination of carrying amount of investment. So what is the policy used? Accounting policy. Cost, we arrived at the cost. Okay. That is carrying amount of investment. That may be how you arrived at the fair value, how you arrived at the realizable value. Okay, like that we have to give explanation. Accounting policies for the determination of current carrying amount of investment. Carrying amount of investment may be anything, cost or even realizable value, fair value, anything, right? There will be different scenario. So that how we arrived accounting policy. Okay, that we have to explain. And another one is, next one is amount included in P&L statement. So what are the disclosure? How much interest we received, how much dividend we received, like that. So like this they give a lot of points. You just go through all these points, disclosures, and they will work out few problems in AS 13. Okay. So just go through the question. What is the question? An unquoted long-term investment. Just what it is? An unquoted. Unquoted means normally not listed, listed, not traded in the stock exchange. Okay, an unquoted long term investment is carried in the books of accounts.